When 4 founders and executives of BitMEX were charged with violating the Bank Secrecy Act last October, the joint action from the Department of Justice and the CFTC against one of the world's largest crypto derivatives exchanges sent shockwaves through the crypto community. Its CEO, Arthur Hayes, who was a fugitive until he turned himself into authorities in April, now faces trial in March next year. But while all of that will draw continued public attention, Alexander Hoeptner has been given the task of getting BitMEX to put all that behind it and focus on the future. The new CEO has plans to expand the company in several new directions, including crypto, brokerage, custody, and spot trading. He joins us from Hong Kong. Welcome, Alexander.
Hi. Great to be with the show.
Thanks for joining us. You were handed a difficult legacy at BitMEX. Can you tell us what you've done to clean house since then?
Well, in a sense, it's not that difficult. Actually, BitMEX already embarked on a journey last year to get to fully KYC'd and AML client base, and that is the starting point to get ultimately to a fully licensed regulatory regime. And in that sense, I'm just, let's say, taking on the journey that was started already last year to bring it to the next level to have a fully fledged regulated offering. As you said, building out the full digital ecosystem and crypto ecosystem from prime brokerage over spot and derivatives, expanding the derivatives universe, and also into custody, let's say, surrounded by information products and the educational arm, I think is necessary to really a fully fledged offering for retail and institutional investors. So as I said, it's already started last year, and now my job is actually to further drive the direction of the group forward and steer the ship through the increasing regulation that was already on the horizon for the last 1.5, 2 years already.
Good morning, welcome to our show. So let's just break this down a little further for some of our viewers who might not have been following this saga that closely. Obviously, you were not there at the time, but one of the charges against BitMEX was servicing U.S. customers. Can you just break down a little bit more clearly, like some of the things that maybe BitMEX could have done differently, or some of the lessons learned that might have avoided the situation that befell, Arthur Hayes and some of the other executives?
Okay, naturally, I can't go into the details regarding what is actually happening currently with the regulators in the US. But generally, I think it's quite difficult to maneuver in a new environment with a regulation which is not really fully fleshed out by a lot of regulators globally. Steering in this environment with a developing regulation framework will have the risk in itself to maybe go into a white spot of regulation. So what you have to do is definitely work closely with the regulators and help them understand the possibilities of the new technology and the new asset class. And I think this is what is needed going forward, to have an intense discussion with the regulators. The regulators are in a very difficult spot right now. Normally, regulators are not on the forefront, so they're not regulating in advance to a development in the industry. It's more like they react. This is their normal setup. Regulators don't regulate technology, they regulate function. So you need to take into account that as soon as you fulfill a certain function, regulation will look at you and say, you're taking that function, so you have to live by the rules of that function, irrespective of what technology you use. But the difference is now with the new technology of blockchain and crypto assets is that some of the regulation that was imposed on classical financial industry doesn't let's say make sense in the new setup, like real-time settlement, rules around clearing, rules around CCPs, rules around post-trade universe. They don't make sense in the real-time world. And so you need to understand and you need to talk to the regulators and make them see the differences on the technical basis, although you fulfill the same function. And this is something where you have to educate, in a sense, the global market on the possibilities that we have there. And this is something which the crypto industry in itself should have, let's say, taken more on as an industry, where individual fighters are trying to do this, but there's a union or universal approach of the crypto industry to make sure that we have one legislation ultimately, globally.
Yes, that totally makes sense. But just that would apply basically to all exchanges across the board. So I understand that you can't talk about what's happening now, but just looking at BitMEX's experience, were there sort of any specific lessons? Because it's probably useful for exchanges in the business, right? Like specific things that maybe BitMEX could have done differently, or misunderstandings, or any actions that could have been taken that might have avoided the outcome that happened.
It's always difficult in hindsight to say what could have done, should have done, would have done. I think going forward, as I said, what you have to do is go into an active discussion with the regulators. Tell them about your direction that you're taking. Tell them about that you plan to get licensed, that you plan to be living by the rules, to make them aware of the possibilities, and then together with them see that you fulfill a proper licensing regime and live up to the rules and the standards that are coming with that licensing regime. In hindsight, it's always easier to say what you should have done or could have done.
So we have been joined by Lawrence Luton, our managing editor for... we've lost him again. Oh dear, sorry about that. Okay. Unfortunately, Lawrence is having some technical trouble. So Alexander, the name of the company, of course, is 100X as well, which just sort of talks a lot to, I think, the leverage that has been available in BitMEX. Some people talk about that as if it's created excessive volatility in Bitcoin prices generally. Are you still going with that model of these sort of large leverage opportunities, or is that changing in any way?
Oh, the large leverage, when you look at, on average, what is traded, the leverage is in a single-digit area. So it's very rarely and a very, very small extent that is really used at a high leverage. So I wouldn't say that this is a dominating product leverage feature that is used. So in that sense, I don't see that we have major issue there, and I don't see that we change the direction that we're taking there. We would look differently at this if that would be the majority of, let's say, products used with that leverage, but it's not. As I said, that's vast majority is around single digit or very, very, let's say, low double-digit figure. So that I don't see this as a problem going forward, also not in the regulated space.
And do you have plans to enter the US market at all? I mean, given the unique regulatory challenges that a company like BitMEX faces, how would you do that if so?
Now, first things first, I think we don't serve clients anymore, and we need to get to a fully licensed and regulated environment first, and probably not inside the US. The US is a very, very important market. At some point in time, you need to have a solution how you tackle the US universe of clients, whether we do this physically, whether we do this over a partnership, or maybe something that we do with maybe a future partner, a current competitor, or some, let's say, classical player who wants to move into the crypto space, we have to see. But this is not something that is eminently directly on the horizon for us. We firstly have to really work on a reputable jurisdiction.
We have Lawrence back again, I believe. So if you do want to ask a question, Lawrence, get one in quick because we need to wrap this up.
What do you think is the major obstacle right now for you to get involved in the U.S. market? I mean, what's that one thing that you need to overcome? Why hasn't it happened yet?
Now, the first thing is, as I said, the first thing is you need to get fully licensed and fully regulated. There's only a few jurisdictions globally where you can have a really fully fledged regulated approach. One of these, for example, is Switzerland. Crypto derivatives is only regulatory defined so far that I know from Bermuda. So getting into a fully licensed regime is easier said than done. You can do it for brokerage, for spot trading, for custody in, for example, Switzerland. The US, from my point of view, are just waking up to crypto regulation with the new government. And so we have to see what that really means. And crypto derivatives is just the next big thing to be regulatorily defined. And so before we have that, we won't come back.
What in your business model has to change? Do you foresee anything that would have to change?
Not really. It's not really that the business model has to change. To get fully licensed and fully regulated, you have to live by the rules as we already do with KYC AML. You have to have a proper compliance, also have full in place and audited in place, and you have to build up all the guidelines and processes so that you get through a licensing regime. It has nothing so much to do with the product. As I said, again, this is not really something that I also foresee negatively on the leverage product. It's more or less that you have to transform the company to be able to live by the rules of reputable jurisdictions. That's it.